Welcome back to the Fed Watch podcast. I'm Ryan McMakin. I'm a senior editor here at the Mises Institute. And with me is one of our specific Fed watching bloggers, writers, columnists that we got at the Mises Institute. That's Robert Aro. And we've had Robert on some other podcasts in the past. But I think what we're going to do here with Robert on Fed Watch going forward is every time there's an FOMC meeting where Powell gets up and makes some new announcement about policy, we're just going to talk a little bit about what was their announcement, how credible is it, what do we think they're going to do in the future. Because I know that our listeners who are normal people with real jobs, they don't tune into the press conferences. They don't watch every move that the Fed is doing. So we'll just give you a quick rundown. We watch the Fed press conferences so you don't have to, basically. The only person I know who watches them, who's a normie, is a friend of mine who he's a single guy and he sold off a business recently. So now he's got a bunch of money. And he doesn't have a job anymore because he just took all their money and now doesn't have his business. So he watches all these press conferences. But I suspect that as soon as he starts a new business, he's going to be too busy for that. So I'm going off of this and thinking that if you actually have a life, maybe you just need someone to distill these press conferences for you. So we're going to talk about those a bit. And so let's just get right into it then. If you were paying attention, you noticed that last Wednesday there was a FOMC announcement where they got together for a couple of days as the Federal Open Market Committee. This is where they set the federal funds rate, which is essentially the key policy rate that all central banks have. They call it different things in different countries. In this country, it's the federal funds rate. This is the rate they try to use to really influence interest rates across the economy with varying levels of effectiveness, but it certainly has some effect. And they've kept it extremely low for a very long time, and we'll look at that a little bit, that these 1%, 0.5%, 0.25%, effectively zero federal funds rate in an attempt to keep stimulating the economy almost in every quarter since 2008. And they've been moving it up over the past year. In fact, over the past year, they've increased it by 5 percentage points. So that's pretty significant. But if you look at the graph, it's still not a high interest rate. It just gets you back to where you were in 2007. And it's still not as high as it was in the 90s, which was not exactly a period of high interest rates either. And so part of what Robert does for us is he goes in and he provides some commentary on our front page. And let's look at that a little bit. Robert, you tuned in to the press conference, and he said, the big news was we're going to pause the federal funds rate after this year of moving it up significantly, but not to any high rates. We're going to pause it here at 5.25%. So this is the first meeting in a while where they haven't increased it at all. And so what do you make of this? Is this, will this accomplish anything? Is this really just a political move? What is it?
So basically we've spent the last year and a bit of, lowering rates and, quantitative tightening and all these things that they tell us will quote unquote fight inflation. And, several bank crises later, a mini bailout along the way. It just so happened that they decided last week to pause interest rates. Now, here's the problem. So, although, I don't believe, and, most people don't believe that you can just, quote unquote, lower inflation or lower prices by raising interest rates, the Fed does believe this. This is actually one of their key pillars or their core principles. They believe in this Phillips curve where, there's a trade-off between unemployment and inflation. And then if you raise interest rates, you could lower inflation and all these, scientific as calculations that we know aren't really true. So here is the Fed finally saying that we're committed to fighting inflation. That's our top priority. but for now we've cut interest rates. Of course, despite inflation readings at still, 4%, 5%. So it's essentially this balancing act where, on one hand, the Fed or Powell has to convince the world that they're serious about fighting inflation. On the other hand, they have to try to justify why they're not continually raising interest rates despite high inflation or price inflation.
And we should note that they really only they only started raising rates after their own inflation numbers, price inflation, started heading up quickly in 2022, right? And then up till that time, Powell was still saying in the fall of 2021 that it was all transitory and no big deal.
Yeah, that was it.
Right, and then they just suddenly figured out, in 2022, there's actual price inflation. I guess we better do something about it. And that seems to be the only reason, really, why they allowed rates to go back up.
Yes. Yeah. So here we started with that whole transitory. That must have been, I don't even know how long did they use that, a year or... It was early on, right? We had the pandemic and the $5 trillion of money printing. They shut down the economy, and then lo and behold, prices started going higher, and then they'll say bottlenecks. So it was really a game of just blaming everything. And I guess now, we have to they have to take some accountability, right? Because first it was bottlenecks. First it was COVID, and then COVID led to bottlenecks, and then that led to shortages, and then according to them, demand inexplicably, rose. People started buying stuff for whatever reason, and then it was transitory. But I guess, we're at a stage where they had to do something about it.
Well, and don't forget Putin's price hike. The Ukraine war caused inflation, too.
Yes, sorry. That was Ukraine. And then I think Biden lowered gas prices. That was on him. So that gave us some relief. Yeah, so it's just, it's just a series of excuses, never-ending excuses. This one is tricky because when, I read through the press conference and I wrote the article on Powell explains the pause, and he'll say things like, this is verbatim, this is a quote, inflation has not really moved down. It is not, and his grammar is always off, but essentially he says, it has not so far reacted much to our existing rate hikes, and so we're going to have to keep it at that. Sometimes his quotes are messy. But he says we've got to get inflation down to 2%, and we will. He says we're committed to getting inflation down, and that's the number one thing. So it's hard. I just don't know how are they committed to bringing price inflation down, but then they're saying, well, we're just going to pause rate hikes and just kind of see the data, and it always goes back to we're going to see the data and talk behind our closed doors and just figure things out. That's kind of the gist of it, which is a tough sell.
And I mean, they were only talking about 0.25% increases anyway. And because they had already slowed, right? They had had a couple periods where they had hiked by 50 basis points, which to the markets was just a huge big deal because they hadn't seen anything like that in more than 10 years, right? And then they slowed it to 25 basis points. And now they're saying, 0, we'll just wait.
Yes.
And the question is, are they ever going to go back to hiking again? I was looking at the old chart and or just the chart of where the rate's been over the years. And if you go back to say 2006, or you can even go back to the tightening period in 1994, 95. And these were brief tightening periods where they did raise the federal funds rate. You can see there were a couple of places where they did pause. One was in 2017. And let's see, you can find a couple.
Yeah, it's like a stairs, right? It goes up and then it kind of but it's not perfectly symmetrical. So I mean, I guess it's not unheard of to do a pause and then maybe 2 months later, 6 weeks later, they come back with a mini hike. I guess that is possible.
Well,
In
there's
Canada, they
never a
did that.
pause that long. That's the thing. Is you find
Oh, okay.
sometimes a pause for a couple of months,
Yes,
but if
yes.
they pause longer than that, it just means it's over.
Yes, yes. So it's almost to say next this coming hike, maybe that's it, right?
Right.
If they say one more pause, then you think, okay, two pauses in a row, maybe that's it,
Yeah, if
right?
they don't hike this next time, then I think we should be extremely suspicious if they plan to ever
Yes.
hike again. Because it seems that if you wait more than 2 months, then you just hit a plateau, and then the next step is a few months later they start cutting the rate again.
Yes. And then if you think about the narrative that they would have to spin, say in 6 weeks from now or in July, they pause again, and then it'll have to come to like 2 months later to say a rate hike. That'd kind of be tough because everyone's saying, hey, well, aren't things okay? You know, we're fighting inflation, things are all right. And then all of a sudden you're hiking again. That would be a tough sell. You know, we can't put it past the Fed because they could sell us on anything.
Right. Well, and
But
they'll claim
yeah,
anything. Who
yeah,
knows? I mean,
exactly.
they say stuff all the time about inflation being transitory, or they say, "Oh, there's no rate hikes in store," and then they do the exact opposite a couple of months later. So, I mean, what the
Yes.
Fed says and what actually happens in the future has no apparently correlation or connection to each other whatsoever.
No. And again, I'm always left wondering when I read these press conferences and I see Powell and you know, I've never be able to get past the question of does he know what he's doing or how much does he know? I would have to assume at this point or at this stage in the game, you know, he knows, I would say personally, he knows he's fooling people. I can't believe that, you know, he's really believing the own things he says, all right? I think, yeah, he's on the payroll, he's on the take. I mean, it's more for public perception and future projections than anything else at this point in time. I just don't think he could claim ignorance anymore.
Well, I mean, it could be he's fooling the most gullible people in the world, which is economics PhDs who believe
Yeah.
that the Fed has independence and functions separately
Yes.
from the American political system. So, yeah, sure. If you
Yes.
still believe that, great, buddy. But of course, that's not the reality. There's clearly a huge political
No.
element here. And in fact, he's trying to say
Yeah.
both things at once. He's saying, oh,
Yeah.
and we haven't brought down inflation yet, price inflation yet with our hikes. So we're gonna still stay on top of the whole inflation thing, but we're just gonna pause right now. And they don't explain why
Yeah.
exactly. And you
No.
note here that there was a good question. And the question was in your article, you say, I don't know if this was Steve Leisman. Only like a couple of these people from the gallery ever have any decent questions.
Yes.
But
Yeah. Yeah. Or decent planted questions, but yes. Yeah.
right, they're
Yeah.
usually just the most boring, trite
Yeah.
stuff. But this one was, quote, I'm curious what gives you and the committee the confidence that waiting will not be counterproductive, that is, waiting to raise again,
Yes.
will not be counterproductive at a time when the monthly pace of core inflation is still so elevated, unquote.
Yes.
So, yeah, what is the,
Yeah.
did Powell give a question to that? I don't really remember, or did he just hem and haw?
So that was, I think that was that Nick, what's his name, Timarios? I think that
Oh,
was him,
from
and
the
then
Wall Street
Leisman was the
Journal?
other
Sure.
question. Yeah, Wall Street Journal. And then I believe it was Leisman who said, as a follow-up, what's the value in pausing and signaling future rate hikes versus just hiking? So why not just rip off the Band-Aid and raise rates today? So
Seems like a
basically, in
reasonable
response to
question.
those, yeah. It's basically, what if not now, when, right? I mean, that's the whole thing.
Sure.
So Powell, he was just in response to those, he was just saying about determining the extent of additional policy firming. Essentially, we have to go back and to them, they're saying, well, we're going to look at the data and kind of make a decision again 6 weeks from now. And then he brought up this thing about, it's common sense to go a little slower. I think it is possible that from what he said, they may just hike next time just to kind of keep it going. And it's just going to, well, we're hiking, we're just slowing down the pace of hiking. But I mean, I don't know. On one hand, they treat it very scientific and, quantitative economics and all this stuff. But they can't substantiate anything they're saying, right? There's no sense to say why pause now and then hike later. There's nothing, even if you tried to have an equation of that, it wouldn't even make sense, right?
Yeah, it's remarkable. Let's not forget that like a year ago, the Fed still was trying to project this aura of, well, we've got this long-term plan. We have very smart economists here, and we know what's going to happen in the future, and we've got it all mapped out for what interest rates are going to be and what the inflation rate is going to be. And you got guys up there like Cash Carey. Right, they're thinking, they're telling you what the inflation rate is going to be 2 years away, and they don't have the slightest clue.
Yes, exactly. Yes, yeah. Yeah, and that's in the statement of projections. When you look at it, only in 2025 does the projections hit 2% for like CPE, PC. They're still projecting, and so think about it, we're still halfway through the year. We still have 2024 to go. They're not even remotely considering like 2%. They're still saying 4% in the year ahead, which is absurd, right?
Right.
I mean, on the one hand, it's absurd because how can you project that? On the other hand, even if you could project it, why not get it to 2% right away? Like it just makes no sense either way you slice it.
Yeah, we should note for those of you who don't follow all this stuff closely, most months they also release with their statement on whether they're going to raise rates or not, their summary of economic projections.
Yes, SEP.
And so they then they include the so-called dot plot. And this is each member of the committee is a dot. And they say where they think various indicators are going to be, like unemployment rate, or where's the target policy interest rate going to be in a couple of years. And so you can look here, as Robert was just saying, right? They're giving these projections out to 2025, and they act like they have any idea what the target interest rate is going to be at that time. Now, of course, for 2023, they're all saying, oh, yeah, it's going to be around, 5.5% maybe. Clearly, most members think the rate is going to continue to go up. They think it's going to go up. Yeah. That doesn't actually signal what their actual position is, whether they favor it going up or not. And then they see, it's all coming way, way down in 2024 and 2025. Now, don't put much stock in this stuff at all, because I went back. So I looked at what were they predicting. You can just go back and look at the old SEPs. What were they predicting 2 years ago? And they were saying that in the year 2023, that the target rate, almost every committee member thought the target rate would be under 3% for this year. They thought that in 2022, they thought it would be around 2% for most of the members. And when, of course, by the end of the year, they had already raised it up to over 4%. So these people's projections are basically useless in terms of a projection of what's going to happen in the future in terms of policy. And I think it really illustrates also all of this talk of how the Fed had a plan. They don't. And that's, I think, as you know, Powell then just has to say, oh, well, we're going back. We're going to go back to our committee, and we're going to look at what the data says, and then we'll decide 6 weeks from now what the policy is going to be.
Yes. Yeah. Like behind their closed doors, they're going to just, we don't really know. Are they looking at anything else beyond that? Are they just looking at projections, or is there some secret hidden data that we're just not privy to, or we're not smart enough like them to figure it out? I mean, we know that's not the case. It's essentially just them, I guess. More or less, they could be throwing darts at a board for all we know, right?
Well, and of course, we don't know what conversations take place behind the scenes with the White House and with congressional leaders, because they're concerned about what the elections are going to be next year, and they don't want the economy to completely tank. I mean, these people are all very short-term thinkers. So I'm sure the ideal scenario is that they can just keep things going. They can kind of white-knuckle with the economy through 2024, and then just convince the voters that everything's fine because we can point to a low unemployment rate and more job growth through the payroll survey, which is a crap survey that shows that everybody's employed and the job market is tight. And that seems to be what Powell is at least publicly basing everything on, because he just keeps going back to the jobs data, even though the manufacturing data is terrible. And in a variety of surveys, according to the Fed's own survey from the New York Fed, and looking at credit card debt, looking at savings, the household situation shows extreme weakness. Real wages have gone down for 26 months in a row. But they're telling us, the job market's never been tighter. Hard to see how the real wages keep going down when the job market's just so doggone tight. And that just seems to be Powell's MO, is he just goes back and he says, well, the job market's really, really tight, so we have to keep raising rates. But now he's backed off on that. So I don't know what Wall Street's telling him. I don't know what the White House is telling him. It would seem that if the job market was so tight, they'd keep raising rates, as a couple of the more decent members of the press asked. They're like, what's the point in pausing now? If the job market's still super tight and price inflation is still... I mean, their preferred inflation rate is the PCE. It's not actually the CPI rate, right? They use their PCE measure, which is, minus food and energy sort of thing. And that's still up at, 4.7?
Yeah.
So that's more than double their target 2%. So what's the point of pausing now? They just don't have any answers here.
No. So, I mean, I think as the game continues, it'll just be more dancing and more... and just more, red herrings and things to blame and, Fed speak and all that kind of thing. And that's, and if we think about it, that's where we are today. But who knows what, 2 months or 3 months, the minute there's the next banking crisis or, stock market collapse, I mean, the whole playbook, in my opinion, is going to go out the window, right? Inflation, jobs data, nothing's going to matter at that point. As we saw, the kind of mini bailout that we saw in March, right? I mean, the balance sheet went back up to 400 billion and all these programs. So, I mean, even if Powell is going to talk about the employment or the inflation, the minute there's a crisis, I think the playbook goes out the window, right? And we're in this crisis mode. Let's preserve the economy at all costs, right?
Well, that's the good point, right? Is all it's going to take is the slightest sign of trouble, and they'll start cutting rates again.
Yeah, exactly. Yeah, that's it. Like, that's unequivocally, you could bet the farm. We can't predict when. Like, no one could say, on October of this year it's going to happen. No one could do that. But when we look at the yield curve and we look at, just, how these things typically go, the rate cut comes when the crisis happens, right? The Fed-induced crisis, which of course they'll never take the blame for, but it's on them, right? So, I mean, if you think about even today, when we talk about the pause or the hike and what's going to happen, it doesn't really matter ultimately in the sense of, rates maybe go down to 3%, maybe they'll go down to 0, maybe inflation goes to the moon. It won't really matter once, we're in quantitative, easing or quantitative easing to the moon, right?
Yeah, there won't be any like rational, long-term thinking. Yeah. Well, the political events will drive everything. It'll be, the economy's bad. Yeah. People are unemployed now. We better stimulate, and then that's it. And then they're it's just gonna be the business of coming up with an excuse as to why they're cutting so much when inflation is high.
Yes, yeah. No, and then when you look at the projections, if we look at the projections, a year from now, they're, it may be completely off. But then that's the beauty of being the chair of the Fed, right? Because anyone inside the Fed, because even if these projections are wrong, which as you showed, they have been wrong or are always wrong, there's no recourse. I mean, Powell's still going to get his pension. He'll still be, who's ever in charge will be hailed as, the savior who, lent out $10 billion and saved the economy and saved the stock market. And if inflation is high, that might just be a trade-off that we have to live with. But yeah, there's at this point in time, there's no recourse for anything they do.
Well, and the profession just tends to back them up too. On our last episode of Fed Watch, I had on Alex Pollock, who after a 50-year career working with these people, pointed out, he's like, all these academic economists, most of them, they receive grants from the Fed. They're essentially on the Fed payroll in one way or another. He's like, so they don't
Yeah.
want to like come out and start bad mouthing the Fed and say its policy is BS. And so you've got this article from the 13th looking at called CNN Investigates the Mystery of Inflation.
Oh, yes.
Right? We've got all
Yeah,
these
that was-
comments are like, it took us by surprise. We can't figure out why there's
Yeah.
price inflation. We printed up $5 trillion, but that's not the reason. It must be Putin. And so we're all
Yeah.
like supposed to just be scratching our heads, acting like we can't figure out why there's inflation.
Yeah, those have been, those on Twitter, they're big, and they're like, it's literally CNN or a Nobel Prize winning economist saying, who knew this inflation? Who knew prices would rise? Who knew this? Who knew that? And you're thinking, we've known this for over 100 years. I mean, Austrians have been talking about this for over a century, like literally over a century. We could cite you Mises right now, and they talked about there's nothing new under the sun of, you print money and strange things happen, right? I mean, there's no...
And this wasn't even some sort of roundabout thing where using the phrase printing money isn't quite accurate. I mean, obviously they're not physically printing money.
Yeah.
But this was just simply an effort to monetize government debt so that they could allow the Treasury to issue trillions of dollars in new debt without the interest rate skyrocketing. And so the Fed bought up trillions of this stuff. And that just kept, because there weren't enough buyers globally to buy up treasuries to keep the interest rate low. So the Fed is just simply buying the stuff up. How do they buy it? They just create new money. So they were monetizing it. That's where you trade money, newly created money, to purchase government debt or some other thing. Sometimes they purchase mortgage-backed securities. Yeah, they were monetizing all of that debt. And that is essentially the equivalent of printing money. Please don't come back and say, they don't buy it directly from the Treasury. Yeah, I get it. They buy it on the secondary market. It doesn't make any difference.
Yeah, you always have that technically, no, they're not actually buying it. The bank buys it, and then they buy it from the bank.
Right.
As if it's like, oh, yeah, you're right. That's like, you got us, right? But,
right, as if buying oil from Venezuela versus Saudi Arabia isn't really buying oil. It has no effect on the global oil price. Of course it has an effect.
Yeah. Or if you bought the oil, or if Venezuela sold oil to Mexico and then we bought the oil from Mexico, well, yeah, we're not really buying from Venezuela, right? It's like,
right, they've got tricks to try and claim.
It's actually, was it Godfather 3? They asked him about buffer. He was on the witness stand. Do you know the Godfather? And they explained to him that he has a buffer. And the guy on the stand, he says, oh yeah, I use a buffer, right? So it's basically the banks are the buffer for the
plausible
Fed.
deniability, right?
Yeah.
Well, and this takes us just as the last issue then to the portfolio, the Fed portfolio, right? We're sitting here, we're talking about the Fed buying up all of these treasuries. Well, then that adds to their portfolio, their assets that the Fed owns. And this is, I think, the other element. Powell didn't talk about it a whole lot during this last press conference.
No.
I mean, he mentioned it.
No. I don't even think, to be honest, like as far as reduction of assets or the Fed portfolio, nothing really came up. Where we are today, it's about 8.4 trillion dollar balance sheet, which is, say 5 trillion. It's basically half U.S. debt, half mortgages, more or less. So for the last year, we've only reduced by about 400 billion. That's, if you think about how crazy, life has been in the last year, think about the stock market. It's not making new highs. Think about interest rates. Think about just how, beat up the economy is. And that's only through a reduction of the Fed's balance sheet by 400 billion. Right? I mean, that...
Right, which is nothing, right? We're talking about 400 billion out of what had reached 8.9 trillion.
Yes, exactly.
And what's 400 billion even out of what they've bought since 2020, right? It had flattened out a bit after 2014, and then 2020 comes and like, oh, the federal government needs another $2 trillion, so we better just buy up a bunch of their debt, which they did. From March to May of 2020, increased their portfolio by, it looks like, almost $3 trillion, so that they could provide the federal government with more liquidity. And they're still not back to that. They haven't even gone back to where they were in 2020. So this idea that there's any sort of serious retrenchment here on the portfolio is nonsense.
No. Yeah, that's crazy. I mean, you can't even picture going back to pre-2020. Like, you'd have to reduce by, over $4 trillion. Like, you'd have to do 10 times what they've done in the what took them a year. You'd have to times that by 10. I mean, just imagine how chaotic the world would get. Even, interest rates. Like, imagine if the Fed just went and tried to sell. What if the Fed tried to sell, $500 billion tomorrow? Tell me what would happen then to world markets. Like, it would go bonkers, right? I mean, you just
the interest rates would go through the absolute roof because the price of bonds would collapse because they're trying to sell so much of it.
And just on the announcement alone, the world will go nuts.
I mean,
the end game.
And just what they were signaling. Now, that's the other half of it, right? So if you're following these press conferences, there's really two halves to quantitative tightening, right? They can allow the policy rate to increase, but what Powell always mentions, like just tangentially, like in one sentence, is that he always says something along the lines of, we're also committed to reducing our balance sheet.
Yeah, that's about all you get now.
Because that's the other side of quantitative tightening, because they know that they can just let the policy rate sit level for a long, long time. But if they're not doing anything with the balance sheet to get some of these trillions of dollars of debt that they monetized off the books, then that's just money that's out in the economy cycling through, and that's a big part of your inflation. I mean, if you're interested in looking at this, you can go to the Fed's data website, go to Fred, fred.stlouisfed.org. It's just a big data site. And you just look at total Federal Reserve assets. And you can see that curve. It's just absolutely huge. Now, this number was under $1 trillion back in 2008. Now it's at $8.9 trillion. This is not normal behavior.
No, it's insane. Yeah.
So if the Fed is committed to real quantitative tightening, they're going to bring that number way, way down from $8.9 trillion, but they haven't. They've barely budged.
Yes. And again, and going back to March, all the, they had to increase by $400 billion just to save a couple banks that no one has ever heard of. Now we're essentially a risk to the whole economy, right? So yeah, there's that too.
So I guess the too long didn't read version of this conversation is... So Powell goes up and he says, oh, inflation's still high and we're still going to do something about it. But, oh, by the way, we're not going to raise rates again, which is totally saying two things at once. He's saying the opposites of, he's saying, oh, inflation's high, but we're actually too afraid to keep combating inflation is basically what he's going to say. And then if you really want to know how committed they are to bringing down inflation, go look at the balance sheet and see that that's basically gone nowhere. That, oh, look, it's down by a couple $100 billion or whatever. Well, as you know, $400 billion since the peak times. This is all it's going to take it's going to take 20 years to get it back to.
Yeah. Exactly. But as we point out, the minute the crisis happens, the minute this thing, I think this thing is going to. If $5 trillion saved the economy in 2020, whenever the next crisis comes, you'll need $10 trillion, right? I mean, any hope that we can even get to, $7 trillion, $6 trillion, $5 trillion, like you said, that would take years. That'll take years upon years. But then that assumes that there is no financial crisis and that everything runs tickety-boo and there's no more, no wars to pay, no debt ceiling, none of that, right? So
yeah, I don't think we can make this point enough. All these projections that the Fed does and which Congress makes through, say, the Congressional Budget Office, when they look at interest rates and they look at total debt, always based on a no recession scenario going forward.
Yeah,
always based on an idea that that tax receipts will continue to go up.
Yes, yeah. It's funny for those projections that they've completely remove themselves of the idea of a recession, of war, of economic crisis, of anything, right? It's essentially these projections are good so long as nothing ever happens that is bad in the world, right?
So if
and
unemployment goes to say 5%, which isn't even like a particularly high unemployment rate, but if it started showing any serious increases, you're right. It would the portfolio would go from where it is now at about 8.3 trillion. It would go up to 10 trillion, like
yeah,
in a
exactly.
month.
Yeah, literally, yeah.
So,
And they'll have a reason for that, right?
So I guess when we
see,
hear
and then-
that Powell is data-driven, right, as long as the politicians are happy and they don't want more stimulus, then I guess they're going to try and hold the line. But as soon as there's any sign of real economic trouble, well, then as the phrase that you use is all bets are off, right? They're just going to completely reverse themselves. You can expect the federal funds rate to collapse and their total assets. They're going to start buying up debt and mortgage-backed securities just to prop up all of that again. And then that'll just skyrocket, just as it did in 2008 and 2020.
Yes, yeah, and just as it did, 2008. Well, and sorry, 2008 and 2020. Yeah, sorry, exactly. Yeah. I mean, that's and if we were to actually go longer back and back to like the Great Depression, all that, you'll see those same things that. The Fed was interfering, the Fed was tinkering with rates, the Fed was increasing money supply. So although we have this Fed data of we could see 2008 crisis and 2020 crisis. I mean, if we had the data, going back for 100 years, we'd see something very similar to that. The Fed doesn't provide it, though. So,
well, we'll come back next month then. We'll wait until the Fed, we know if the Fed is actually going to hold another month, in which case precedent would suggest that they're never going back to letting the rate go up, or they could possibly then increase to 5.5%. Target rate, in which case would continue them on this stair step upward, and might have some effect then on price inflation. But it's going to depend on how committed they are. I mean, if the job data weakens before then I'll be shocked if they continue to raise. But it could happen. So we shall see. So thank you for joining us on this episode of the Fed Watch podcast. And we'll be back in a couple of weeks with another guest to talk about maybe some foundational issues. Maybe we'll have Alex Pollock back. And then Robert and I will talk about it the next time there's another FOMC meeting. So until then, have a great couple of weeks, and we'll see you next time.
But I'll make a living just where I don't know, 'cause I'm busted. I'm broke. No bread. Like nothing. Forget it.